What's up, everyone? Welcome back to the Landlord Chick podcast. So, we're going to start a little mini series here. It's probably going to go 3 episodes, and we're going to get into finances. So, we're going to talk about budgets, we're going to talk about setting up your chart of accounts, and then we're also going to talk a little bit in the third episode about reports. What kind of reports real estate investors should look at, how often should you look at it, and what reports you should be able to read, because you definitely need to read these guys, not just be able to produce them, but read them to understand them. I do have another episode planned, which will be posted after we get into the financial series. I have a special episode that is going to be a more personal one of the ones where I talk into what's going on with me, specifically in real estate, and it's going to be titled Clarity from Tragedy. And it's going to get into this idea of how, since my mother died, and as I spent a lot of time sort of moping around the house and just in my own la land, I had some realizations about my direction in real estate, how I was running the real estate side of my life. Because as you've heard people say, when someone dies, you learn about the fragility of life again, or you rethink your direction, or whatever it may be. But having someone die is definitely a transformative experience. So I'm going to share a very personal episode about what that has done, my mom's death, how that has impacted what my direction and my plans were. But for now, we're getting to a financial series. This is going to be fun. Let's get into this, guys.
Building a real estate portfolio is as much about buying properties as being a de facto entrepreneur. I'm Karina Ufinger. I'm a multi-property investor, rental management company CEO, and also a landlord coach. I'm going to show you the systems and knowledge you need to thrive as a real estate entrepreneur. From your first property purchase to building a portfolio of passive income where you work less than 5 hours a week, you'll learn the essential information and skills to build a profitable portfolio and live the life you truly want. Whether you are well on your journey or just starting out, you're in the right place. Welcome to the Landlord Chick podcast.
I just realized when I was saving that intro that I recorded that if my sister ever listened to this podcast, who is a bookkeeper with an accounting degree, she probably would get a spark of joy when I said that this is going to be fun. Because longtime listeners know that I have a hate-hate relationship with numbers. Like, I hate numbers, and I swear, numbers hate me in return. Like, they are out to get me. But that doesn't prevent me from budgeting for my properties and looking at rental reports. So we're going to start with, I think, is the building blocks of a budget, as well as understanding your finances in your rental portfolio, and that is creating a chart of accounts. Guys, please don't fall asleep on me. Trust me, while it might be not the most sexy conversation we're ever going to have, it's a very important one. At the very least, it's important so that your accountant doesn't go insane when he's doing your taxes. But also, it's really good for you for being able to see concretely where your money is going and also where it's coming from. So I'm going to cover some of the basics in regards to setting up your chart of accounts first. So in case you need a little bit of a crash course, chart of accounts, you have incomes, expenses, assets, and liabilities. Income and expenses, I think, are pretty self-explanatory. If you've read Rich Dad, Poor Dad, assets and liabilities, you'll already know. But in a general sense of the equation here, for those that haven't read Rich Dad, Poor Dad, which you really, truly should, especially if you need help in regards to understanding assets versus liabilities. But Rich Dad, Poor Dad, they have some good work in there. Cash flow quadrant of his has some more good work regarding assets and liabilities. But assets are things that bring you money, but indirectly. the best way I can think of to describe that. So obviously your rental income is direct income, but we also should know that owning a rental property brings in money in the sense of it increases in value. That is an asset. This is why you talk about, if you've heard people in real estate saying that your home isn't an asset, it's a liability. Kind of like a little bit of a gray area there for me, honestly. But an asset is something that has value, that brings you value. Now, a liability is debts you owe to other people. So your mortgage on your rental or your mortgage on your primary home is a liability. Security deposits that you collect are technically a liability because you owe them back to the tenant. It's not money that you get to keep just because you got it. You may owe it back to the tenant, so therefore security deposits are a liability. Then we have operating expenses and non-operating expenses. So operating expenses are ones that are specifically attached to a property. So these would be your repairs. It would be your snow. It would be your replacement. Those are examples of operating expenses. Now, non-operating expenses. And this is a definition I'm still kind of trying to figure out. But these are expenses that aren't necessarily attached to the property, but they are incurred through the general day-to-day operations of the business. So if you have to send a package out, that would be a non-operating expense for me, it would be postage and delivery because I have that account. Then you might also have auto insurance. So if you have a car that is owned by your rental property LLC, the insurance for it is a non-operating expense. I'm not advocating you getting a car under your rental LLC, by the way, because it's much more complicated than just going and buying one and saying, hey, this is for my properties. But I digress from that conversation. Any sort of dues that you pay or subscriptions are a non-operating expense. So association dues might be things like being a part of a local real estate investing group, or subscriptions to, sounds kind of dated, but trade magazines, or here we go, online forums like Bigger Pockets. That's a subscription. And then also things like administrative fees. So administrative fees is the category that I use for registering my LLC with the state every year, which I have to do. So that's an example of non-operating expenses. They aren't directly incurred by the property, but more they're incurred as day-to-day operations of the portfolio or the business. That's a better way to look at it. Operations for the business side of it. Okay, that is the boring conversation about accounting primer done. So wake up, guys. We're going to get into this. Okay, so I'm going to go through my chart of accounts and give you an idea of how I set mine up and why I set it up in this specific way. So I'm going to start over on the expenses side because obviously that's the one that's more in depth. Income is rather straightforward, so I'm going to leave that towards the end. So the first thing I want to talk about is maintenance versus repairs. I have a header. So, okay, again, sorry, getting into the little conversation of accounting terminology here. So a header account is one where it's a category account, and then beneath it you have sub-accounts. So you might have a heading category of maintenance, which I do, and then I have sub-accounts under that are under maintenance. So why do I have a maintenance as well as a repair one? Well, maintenance is used for capital expenditures because capital expenditures are not supposed to be direct expenses. So direct expenses are ones that you just direct expense the year that the payment or money transfer more or less happens. Capital expenditures are things that should be allocated over X number of years as the usable life decreases. So under maintenance, I have categories of appliance purchase. Now, Sometimes accountants don't care too much about appliance purchase when it's kind of small in relative consideration of the portfolio income. Your accountant might choose to expense that. That is their choice. So it just is something I leave in there under that expense. And sometimes if I've only bought one stove in a year, because I have rental income on an annual basis of like $32,000 or something, I think, because that's only $600, my accountant very well will direct expense that. But let's say you have a rental portfolio income similar to mine, and you buy, let's say, $2,000 worth of appliances. Okay, maybe your accountant might say, all right, we've got to use that as a capital expenditure and we've got to allocate out its usable life, which means they take a portion of that purchase every year and apply it to your taxes for the next X number of years. Then under the maintenance category, I also have driveway and parking lot replacement. That might seem like an odd category, but guys, I have some gravel driveways that I've worked on replacing, and I also have a cement driveway that I really need to fully replace at this point, but spoiler alert, I'm kind of putting on the back burner because it's a shared driveway and blah. Anyway, then I also have flooring purchase. Guys, flooring purchases is a capital expenditure. It is something that the IRS says you need to put as a capital expenditure and allocate out over time. So buying carpet, buying LVP, buying vinyl, those are all flooring purchases. Now, we'll get into flooring repair in a little bit on the flip side of this conversation. But again, generally speaking, if the purchase is considerable in regards to the amount versus the rental income, your accountant's going to want to allocate that out over time. Then I have HVAC replacement. So replacing, for me, furnaces. If you have central air conditioning units, it would be replacing central air conditioning units as well as furnaces. Then I have millwork. Now, this might seem like an odd category, but here's the thing. If you've ever been to Menards, you know that millwork is windows, doors, and cabinetry. So when I needed to create a category for windows and cabinetry under my capital expenditures account, I just called it millwork because I have Menards here. That's usually where I go to. So it just made sense. Now, doors are not a capital expenditure, by the way. So I just want to make that clear. Like I mentioned doors in there, but doors are not capital expenditure. Doors are going to be over on the repair side. So when I say millwork, it's only applying to cabinetry and windows. Then we have roofing replacement, which, well, kind of straightforward, guys. It's when you replace a roof. Spoiler alert there for sure. All right, then going over to the repair side of it. Now, I'm not sure that I'm happy with how I set this up, and I'll get into that in a moment when I get to these categories. But right now, this is how I have repair set up. So again, repair is going to be a main category. And its sub-accounts are appliance repair. So when we repair an appliance, whether it be having someone come and fix something in it, or even, honestly, guys, buying parts for a fridge in the sense of door handles or the bars that are on some doors, the very common butter latch, I call it, that breaks a lot. Those are all things that are categorized under appliance repair. Then I do have flooring under repair because, guys, you do repair flooring. You might just be doing a very small section of carpeting. Maybe you're just replacing the carpet in a closet, in a bedroom closet. I don't know if it really makes sense to expense that out because it's only going to be like, what, $300. So that would be a repair under repair category. Also under flooring repair, if you have vinyl that kind of starts to bubble over time and someone can just like roll it back out and reattach it with new glue, that would be flooring repair because you aren't actually purchasing new flooring. Then I have HVAC repair. Then I have roofing repair. So we don't replace the whole roof, but we do a patch. That's a roofing repair. Then I did include a septic category under repair. And again, I'm not too sure I'm crazy about this one, but I do have it under there. So that is for when I get any drains routed out or toilets routed out, things like that. That all goes under septic. Now, the other two that I'm not so crazy about being under repair, and this is where I might move them, but I'm not entirely sure, lawn care and snow and ice management. So it's important to remember if you are an out-of-state investor, like if you live in a sunny part of the state and you go to invest in Oklahoma, North Dakota, Illinois, Wisconsin, in case you guys forgot, we have winter, which means we have snow. And we're not going to get into this too much, but when you have rental properties, specifically when you have 3 units or more, you're going to have a snow ice management expense. So that's when you have somebody come and plow the driveway, shovel the driveways, maybe throw out some salt if it gets icy. That's what that category is for. Those are the ones, the two I'm not crazy about being in there beyond the septic one. More certainly the lawn care and the snow and ice management. I'm not really sold on it being a sub-account of repair. But in the grand scheme of things, it probably really doesn't matter. So what are some other expense categories that you want to have? Moving beyond those main categories. So some uncategorized accounts that I have on my chart of accounts is administrative fees. Talked about this a little bit ago. I mostly use that for having to reissue my LLC license every year with the state. But it can come in other ways. If you have maybe a fee that is placed on a loan because for whatever reason it's there, then that might be something you categorize under administrative fees. I still have advertising as an account. I think mostly for the property management realty side of it. I don't really know the last time I've used the advertising expense for my portfolio. But if you do have like a premium subscription to Zillow or something like that, I would put that under advertising instead of the category we're going to talk about in a couple minutes, which is the subscriptions category. So advertising would be anything you incur in regards to advertising. So it could be a Zillow subscription. It could be buying new for rent signs. There's a lot of things we could probably categorize under there. Then we do have association dues and subscriptions. So association dues, generally kind of straightforward. If you belong to, let's say, a local real estate organization, or if you're a realtor and you solely or predominantly use it only for your rentals, then that could certainly be under association dues. Your dues to your local real estate association, then to WRA, and then so on and so forth, if you need that kind of layout. Then subscriptions. So we just talked about Zillow should be under advertising, but you might have other subscriptions. So maybe there's trade magazines, which kind of sounds like an old terminology at this point. Oh, Bigger Pockets. That would be a subscription. So Bigger Pockets, real estate investing website. If you have a premium or plus account, both ones I think they charge for, that would be something you could put under subscriptions. Then if you happen to have a vehicle that you use exclusively for your rental business, and that's the key, exclusively, which means you can't use it to haul your kids to and from school. You can't use it to go out to dinner on Friday nights and Saturday nights with your friends. If you have a car that is solely meant for real estate, then your chart accounts, your chart of accounts should include things like auto gas, auto insurance, auto repair. Those sorts of things are definitely a good thing to have in there if you have a vehicle that is solely owned and operated for the purposes of the business. Another category I have is travel. So for me, traveling comes in because I go to a lot of conferences that are for real estate. So whether it be airfare or this would be gas, yes, this gas, save your receipts, the purpose of them, that could be put under travel expenses. Sorry, I had to take a drink there. You guys know I like to do this in one shot, so you get all the realness of recording a podcast. So if you have cable that is included in your services at the property, it just happens to provide cable or internet for everyone, then that would be an expense category that you want to have. If you're someone that donates to charity through your LLC, you obviously want a charity category, and that will be a non-operating expense. Going back to cable, if your portfolio is big enough where you have an office that you use solely for your real estate endeavors and it's not a part of your house, that's where it gets a little murky. Consult an accountant on that. But going back to cable, that could be a non-operating expense as well. So it all kind of depends on how you use it. If you have both, where you have an office that you use internet and then you also have properties where you provide internet, don't go overboard and create two separate cable categories, one as operating expense, one as non-operating expense, because in the grand scheme of things, that won't really matter. All right, then under cleaning, I have obviously, cleaning, which is meant for hallways. I do have a hallway I should clean, but I really don't clean that regularly, guys. It's kind of nasty. And then obviously rental unit cleaning as well. Let's see here, going through here, ones that are applicable. Computer software. Certainly if you buy a computer that is meant predominantly for the rental portfolio, any software expenses that are used for the rental portfolio. So if you subscribe to AppFolio or Buildium, or you have QuickBooks separately, guys, I hope you're not using QuickBooks to manage your rental income and stuff like that, because dear Lord, no. Anyway, off of my little soapbox there. Then some other accounts that you want to have, you definitely want to have, I recommend having two savings accounts. One that, an account, by the way, guys, I'm not talking physically at the bank. Just a reminder, we're talking about the chart of accounts here. So in the chart of accounts, you want to have, I believe, two savings categories. You want to have escrow savings, and then you also want to have property tax. Escrow savings is just your general savings, saving up to buy a new property maybe, your excess cash flow that you want to save up and just have there. But then also it should include escrowing for your water if it's paid quarterly, escrowing for your insurance, and then also escrowing for, oh my gosh, I lost it. There was a third one. If I think of it, guys, we'll come back to it. I'm so sorry. It was there and then it left. But that's what you want to have escrow savings for. Then, like I said, the other side, you have property tax escrow, which if you have to escrow for your properties for taxes, you want to have that lineated out separately. It's just better for your peace of mind when you're reading through your reports. Now, if you have loans on all your properties and they take care of the escrowing for you, you really don't necessarily have to have this in your chart of accounts. But if you ever choose to make up a deficit in what the bank escrowed and what the bill was, or the projected bill for the next year is, then you would want to certainly create a property tax account for that and pay that out. Okay. So then going into insurances, really when it comes down to rental properties, you're going to have property insurance, and that's really going to be it. So most investors wouldn't have this as a main account and then a subcategory situation. I have it just because in my chart of accounts, which takes care of my realty as well as my property management side of it, I have other insurances. But property insurance is definitely a chart of accounts account that you want. That was an awful statement. Okay, then we have legal evictions and accounting. So this is a very precise definition according to the IRS. So legal evictions and accounting, if you use any one of those three, they are for very specific purposes. Legal is only for expenses from an attorney or a sheriff in regards to claims or court action against someone. Evictions, if you use that, again, solely used for evictions. And accounting, and this is key, accounting is only for expenses paid to somebody that does accounting for you. And that includes tax preparation. So any one of these three, the IRS is very specific with. So you really want to make sure that you have that category very fleshed out and very straightforward, what you're going to put in there based on what the IRS says. All right, then we have licenses and permits. That's something where if you're required to register your rental property with a license every year, that would be something. If there's any sort of permit that you have to get, occupancy permit, things like that, that would be licenses and permits. I honestly don't use that category for my real estate because we don't have licenses required in the state here in Wisconsin. But I know there's states out there that require it, municipalities too, so that's why I decided to include that in this conversation. I use it certainly on my realty side. There's no doubt about that. Okay, so then another thing in your chart of accounts, mortgage, guys. Kind of like a no-brainer, right? So you have first mortgage payment, maybe you have second mortgages. So second mortgages would be a private lender that lended you money for something. So first mortgage is the banks, second mortgage is everyone else. So that would be your private lenders, things like that. Because remember, guys, going back to a little bit of real estate law here, banks are always a first lien position. So anybody after that lent money regarding the property is in a second lien position. So that's why they're called the second mortgage on your chart of accounts. All right, then obviously you might have a category called bank fees. So this would be something that covers if you had an NSF fee or maybe your bank charges you some sort of analysis fee or an ATM fee if you pull out cash to pay the sheriff for something. That would all be covered under bank fees. All right, office expenses. Again, if you have an office, certainly that would go under that. I would probably put that more under office rent, but I currently don't have that category. But office supplies would be under here. So buying Post-it notes, buying pens, I guess, notepads, I don't really know, whatever you guys buy for running your rental portfolio as far as the office goes, that would be under office expenses. Office supplies would be the subcategory. And then again, if you have an office that is entirely devoted to your management of the rental properties, and I think it should be out of the home, office utilities might be something that you would use. All right, of course there's an other expenses category, but guys, I really try super hard not to use this because anything you have as other expense, you're ultimately going to end up having to explain it to your accountant, line item by line item. So that's why I really, really sparingly use this. And I honestly think I've maybe used it once in the past 5 years for my rentals, and now I can't even remember what I used it for. So it's a good account to have on your chart, but really, really, truly, guys, use it extremely sparingly. All right, then I have painting, which is a separate category. It's not included under repair. Don't ask me the logic in that. That's just what I chose to do. Painting would not be a capital expenditure, by the way. I've heard that kind of mentioned a couple times, but in reality, it's not. That is just a direct expense sort of repair thing. Pest control. So pest control, I should probably move that to a subcategory of repair, but anyway, here we are. So if you obviously have some sort of pest situation that you have somebody take care of at a property, or you just have what a lot of places call peace of mind package, where they come and spray and it takes care of, ants and prevents cockroaches, things like that from appearing. That's definitely probably a good idea to have in there just in case. Then we have plumbing and electrical. That is its own main category, and then it has subcategories of electrical and plumbing. Again, not sure I'm too crazy about that. I might change this. But at the very least, you want to have electrical and plumbing just because it helps pinpoint specifically where you are spending most of your money. Because if you just have repair and you put everything in there, you put HVAC in there, you have electrical in there, you put plumbing in there, you won't really sort of notice that, hey, maybe I have a true electrical problem at this property and I really should get an electrician there to review some things. Because they're going there all the time to work on outlets that aren't working or this or that. And kind of the same logic goes with plumbing. Like, if you notice you have a lot of plumbing expenses at a property, maybe you need to kind of look into what's causing them. Are tenants putting a lot of stuff down the kitchen sink? Are you having issues where maybe it's just a good time to start replacing a lot of the copper pipes because they're starting to fail? That's why it's a good thing to have those pieced out. Postage and delivery, pretty self-explanatory, and I kind of mentioned it earlier. So this is for buying postage, for mailing out bills, and then anything you have to deliver via UPS or USPS, whatever your preferred carrier is. That will be something under there. I put under there too the UPS box that I have. So I have a UPS box that is used for both property management, realty, as well as the investment side of it. But I have postage and delivery. I do apply my box fee, rental fee, into that category. So you can do the same if you have one for your rentals. All right, we're kind of coming to the end here, guys. So kind of good, right? Because this has been a long one. All right, so then we have seminars. So I had travel earlier. Seminars are admission fees to real estate seminars or business seminars even. So those are categorized out. Then obviously there's a property tax category. We already kind of talked about that. Telephone and cell phone. So if you do have cell phones, you can use that as a business expense. If you have a telephone line like landline that is specifically for the rentals, you can obviously expense that as well then too under that. All right. And then we just have general utilities. Kind of self-explanatory here. Electricity, paying for electricity. Gas, paying for gas. Trash disposal. Now, trash disposal, you won't need to itemize out unless, of course, you have a vendor you specifically pay for it. Because if you have property taxes, your trash is on that, assuming you don't have a separate vendor for it. So if you have duplexes where you just have city collected garbage, you don't need trash disposal. Unless, of course, you want to use it for things like cleaning out a unit and disposing of left behind items. Then I might say you certainly should have one. In fact, I'm going to retract and say you should have one because, again, we talk about inflating categories where you can't really pinpoint where you have issues, or it might lead to questions from your accountant. It'd be a good idea to have trash disposal as a separate one if you find yourself cleaning out a lot of trash from vacant units when they get turned over. And then water and sewer expenses. So regardless of whether or not you collect income for it, you charge the tenants for it, you're going to have an expense for it. You really should have the category set up even if you have single family homes, because obviously there's going to be vacancy at some point and there's going to be a little bit of water and sewer that you're responsible for. So the same thing goes with electricity and gas. Just go ahead and get those categories set up even if you only have single family homes, because when you have a vacancy, you will be responsible for that. All right, that took care of the expense side really quickly, and I know this has been long. This is 31 minutes at this point, guys. I did not anticipate that, but let's look over into the income really quickly. So obviously we have rental income. Rental income in my book should be specifically for the rent of the unit in your chart of accounts. Things like pet rent, storage rent, if you rent out units in the basement or somewhere for storage, garage rent, those should all be separate. They should not be included under your general rent. Then also for income, you might need to have income account set up for tenant fine. So if you have certain fines in the lease, for violations. That would be something you want to have set up as a tenant fine. So an example of this would be picking up dog doo-doo in a duplex, and only one person has a dog because the other one's allergic, then you're charging that tenant, and it's a tenant fine for picking up the doo-doo. You want that category in place. Then you also want to have a category in place for water and sewer income if you charge the tenant for it. You guys have heard me kind of say this before, that especially with duplexes, I don't really like the tenant paying the water bill directly. I prefer to charge them and then we pay the bill out. So certainly water sewer income is something you want to have there in there. And again, even if you have single family homes, because you could come up with a situation where you get a delinquency notice and it's going to be added to the tax roll, you want to go ahead and pay it before it goes onto the tax roll and it accrues more cost. And then you want to charge the tenant, and that charge will be water and sewer income. Then I like to have, if you have coin laundry, you should have laundry income. That would be from the coin operated machines. So collecting the coin, depositing into the bank. That should be its own income, laundry income. Then you might also just have repair income. So if you are someone who charges tenants for repairs, and this is something I do encourage. I don't necessarily think that every single repair should be solely paid for by the landlord. So if you have a tenant who is consistently breaking doors and they're falling off the hinges, which, I mean, we all know they don't magically fall off the hinges, although I've had 2 tenants try to convince me of that, that would be a repair income thing where you're charging them for it and they pay it. Then possibly you might have just a general utilities income. So that would be something if they pay you a sort of per month premium for having electric or gas included, or maybe just some sort of arrangement you have with the tenant. I'm not going to get into that because I don't condone it, so I don't want to put that idea in anyone's minds. But that's another income category that you might choose to have. Then, really quickly, guys, honestly, liability accounts, not too many to talk about here. So security deposit is the big one I want to point out here. Security deposit should always be set up as a liability because, as we talked about before, it's money that's owed to somebody else because it's not your money until they move out and you have verifiable expenses associated with that security deposit. So that should always be a separate liability account. Whew, guys. We made it. Oh, we almost did. One last one. Owner draw, partner draw, taking your money out of the portfolio. That would be the last category that we didn't cover. Self-explanatory, guys. I don't really need to get into it. So there you go. There's your exhaustive review of setting up your chart of accounts for your properties. Guys, this is extremely important because this is going to save you a ton of time when it comes to your tax accountant. Not necessarily the more categories you have, the better, but certainly getting these big ones categorized separately rather than just having the big repair or capital expenditure account is going to help tremendously with eliminating questions from your accountant. And as I said before, when you go to review your statements, it's going to make issues more concretely obvious to you when you have them properly delineated out into subcategories. Woo! All right, 35 minutes, guys. I'm kind of sorry, but I'm not sorry because this required a deeper dive. Like, I didn't want to chintz on this conversation. But you guys know, generally, I try to keep these to like 25 minutes. Sorry that we're over, but it was totally worth it. 100% it was worth it. All right, guys, I hope you have a fantastic week, and I will see you next time on the Landlord Chick Podcast.